welcome into a brand new episode of WSI TV. Enjoy the show.
Welcome back to another brand new episode of Bishop's Move here on WSI TV. I'm Jordan Bishop and I'm joined by Lea Warren. How are you doing today,
I'm
Lea?
doing great. How are you?
Good, thanks. So before we get into the topic of today, which is energy uncertainty, I want to prompt you to go over to WSITV.com, sign up for those free daily newsletters, and of course you get free access to the WSI TV Vault. So make sure you head on over there. Lea, I'm going to hand it over to you to explain to everybody what's been happening in the news lately.
Sure. So there's been a lot of headlines lately, specifically about oil and Iran and Iraq specifically. Recently, one of the generals of Iran, the second most important government official, was killed in an airstrike on January 3rd, actually. And so this has caused a lot of outrage. Iran has since retaliated against American base in Iraq, which has brought Iraq into the circle and has put Iraq in a bit of a difficult situation because it is an ally of both Iran and the United States. Now, this doesn't mean that we're at war. This does not mean it's the end of the world. But it does have a lot of people afraid, especially because Iran and Iraq are both major producers of oil in the world, along with the U.S.
Right, and while these events are extremely sad, we always want to look at the positive of it. We always want to look at what this means for us over here. I can tell you now, I'm confident there's no physical danger to us here. Hopefully there's no more danger to anybody over there. We'll see how that plays out. But what we're really talking about again here, as Lea said, is the oil prices and really how we can sort of get in on that and see what we can do with this information here. Again, very tragic events, but we've got to move forward as always. And the stock market's telling us that it's confident in positive things moving forward. So what's funny here too is Iran is really trying to take over the Iraqi elections, which are coming up pretty soon. So they've actually expelled or tried to expel the U.S. troops from the country, which I don't think is going to work out too well. But that's the basic lowdown of everything that's going on. I'm sure you've seen it in the news. Again, very sad what's happening over there. But let's turn towards the financial markets here and ask what it really means for it.
Yeah, so the biggest area that's being affected, as we said, is oil. It's just the general energy sector because the Middle East is a huge producer of oil, and the U.S. gets a huge amount of their oil from there, and then we also send a lot of oil out into the world. And that's just a really big area of the market. I mean, we watch oil here in the office as one of our standards for what's happening in the market. And we can expect our safety stocks to be reacting to this as well because of the panic about what's going to happen in politics, what this means on the world stage, what this means for the market in general.
Yeah, absolutely. Those safety stocks, we're talking about gold. I mean, oil is considered a safety stock as well. See what happens when tensions like this arise in the Middle East. They cut oil supply, and the demand's still there, which means the price goes up because there's less supply with equal demand. So it's really complex, but it's really telling when you're watching these charts. So Lea, why don't you talk about a little bit about what energy means for the Middle East right now, what it means for us in the Middle East?
Yeah, so Iran specifically is an energy superpower. They produce 5.1% of the world's crude oil, which might sound like a small number, but for a small country like Iran, that's a lot. And they're currently the 5th largest oil producer in the world. Iraq is the 4th largest, so they're right ahead of Iran. So these two big powers in the oil industry are kind of at odds, and then we're in the middle of it too now. Iraq produces 200 billion per year in oil exports alone, so they really, really depend on that for their economy. So it's just a very, very tense situation, and then we want to make sure that none of this is affected, and they want to make sure none of this is affected because their economy depends on it.
Right, so it's a touchy situation here. I mean, $200 billion is a lot of money. I'm not quite aware right now of what the GDP of Iraq is, but that's a healthy chunk of that income that they make. So it's again a touchy subject over there. And I mean, we consume a lot in the U.S. You said 7.28 billion barrels, right?
Yeah, and there's 42 gallons in a barrel, so It's a huge amount.
It's a lot of oil. Now we do have a lot that we conserve and have on reserves over here in Alaska and Texas and things like that. But of course, we're over there, I would say, helping their economy. I mean, I don't want to take too much of a political stance here, of course. Again, it's very sad what happened, but it's part of the world economy, what's going on right now, what's at risk. So again, it's crazy times over there.
Yeah, so, but on the bright side, it's highly unlikely that we're going to lose this import. That, like you said, they kind of depend on us and other nations like us to buy that oil from them, so they're going to want to continue to export that. Iran and Iraq's economy are pretty heavily based in that oil export. Right. So if they lost that, their economy would slow down, and it would mean really, really bad news for both of them.
Yeah.
So they're going to do everything they can. There's negotiations upcoming between Iran and the U.S. They're going to do everything they can to keep us from war and keep that from being in peril. So
right, and I personally think they'll figure it out. I mean, there's one thing the stock market doesn't like, right? It's uncertainty, right? It can cope with bad news. It can thrive on good news, but when things are uncertain, it gets really choppy, really volatile. Yes. So really, these people who are gonna, these officials who are going into the negotiations don't care about the stock market, but the stock market is watching these negotiations. Absolutely. Right? So the stock market's got an eye on that. Hopefully we'll come out with some certainty. The stock market, again, is telling us something else. It seems certain about everything it's doing right now, which we'll get to in just a second. But let's talk about the stone cold facts here in this situation.
Yeah, so of course the media is always just reacting very, very quickly and direly to the situation. Every headline is worried about oil. It's talking about oil tanking. But the fact is only 13% of our total oil imports come from the Middle East. That's still a big amount, and that would mean a lot of trouble if that were to go away. Right. But we personally produce 40% of our own oil. So we use 40% of our own oil, and then we have, like Jordan said, a bunch on store. And we're globally the second largest producer of oil. So we're covered there.
Yeah, exactly. I mean, I think the cards are really in our hands, in our favor in this situation. But that's crazy. Like 13% imported, still 13% of anything imported. That could really rock the economy, and that would heavily disrupt their economy over there in the Middle East. So again, I imagine they'll work it out. But of course, the media loves this. They eat this up. I mean, you look on Google Trends. I know when this happened, when the assassination happened. The keywords Iran were trending, Franz Ferdinand back from World War I, oil was trending. I mean, so they're just eating up these keywords and throwing them in their headlines, getting those clicks. And again, we talk about this a lot, but we really just want to talk about the facts here.
Yeah. So despite the facts, which is that we have a stable enough ground in crude oil to withstand this, even if things were to go south. And it looks like things will not. We're entering negotiations, as I said, always looking on the bright side. But the media is reacting with all of these scare tactics, and it's causing a lot of uncertainty, which leads to fear, which has a direct effect on the market. And the market usually reacts with unusual dips and sharp turns and unexpected volatility. With fears like this, we'll see a spike in oil probably, and both in daily life and like in the stock market, we're going to see the effects of this in our finances, both like when you go to pay for your gas, you might see that price hike up a little bit, and then in the stock market, we might see oil fluctuate higher or lower unexpectedly. Yeah,
and one thing I just want to say about the rise in gas prices, I mean, that's a bad thing for most people, but as investors, we should look at that as a good thing, because if you invest in that oil as it's rising, you're technically going to get that increase paid for on whatever profits you make there. And of course, there's other sectors heavily affected by this. I mean, gold is always a player. It doesn't matter what piece of news is coming out. Gold's going to react. If people are scared, gold's going to spike. If people are comfortable, gold's going to drop. I mean, it's always going to be held by most investors in some portion of their portfolio. But of course, when this sort of thing happens, we immediately look at gold. Right, and of course the S&P, but gold is just as important. Yeah. So amongst all of this, stop. Breathe, like Taylor and I like to say, check your emotions at the door. Ask yourself, is the uncertainty in the market or just in the media?
Is it affecting the whole market or just a specific sector? And where is my safest and most profitable investment, no matter the outcome of the political shifts happening right now? So we're going to look at that and look at some of the facts of what's happening in the market.
Yeah, and those are 3 great, incredible questions before you make any trade, I think. So, of course, Lea, why don't you kick us off with what's going on in this chart?
Yes, so this is one of our general energy sector standard stocks. So this just kind of helps us track what's happening in the energy sector as a whole. Oil is a part of that, but clean energy is also a part of that. Every energy imaginable is a part of this chart. So right here you can see that it's just kind of a volatile chart because energy is a volatile thing. It is affected by seasonal changes. It's affected by where different imports and exports are happening with non-renewable resources. It can change based on new surges in renewable energy.
Right.
But you can see that it's looking pretty strong. There is a slight dip right here for the very, very beginning of January, which is probably because of the tensions going on.
Everyone unloading the energy sector. And you can actually trade this. You know, you can go and buy it, which is great because you're covering all your bases. But we will get a little more precise in just a second. But that's interesting because over the last couple of weeks, this chart has been sort of flying.
Yeah, so it's been doing great. But as you can see, there have been other big disturbances. I mean, if we look at September and October of 2018, there's this big drop right here. And that was even before the rest of the market completely started to drop. It did follow that trend, but it was a little bit early on it. And that's much more severe than what we're seeing right now. So
yeah, I mean, that's the energy sector as a whole.
Yeah.
That's really all you need to know for that. So what are we looking at here?
So this is the oil standard that we follow. And so there are a couple, but this is one of the main ones. And again, you can see that there's just this little dip right here. It's not huge. We're still within our safety bounds following that 40-week line.
Right.
But there is a dip, and that is because of the tensions. That is because of the volatility and uncertainty in the market because of these headlines. And it's just very interesting to watch how much things react, not necessarily to anything changing in trade negotiations or anything like that, but just to the headlines.
Yeah, and one thing you'll see here too is oftentimes with these, the news headline comes out and people start unloading, right? The average person starts unloading their stocks. Even some of the so-called professionals will start unloading these positions they're holding in these ETFs, these energy ETFs. But most of the time, if you hold out against that news, it'll spring back, which
Absolutely.
I mean, I fully expect from this.
Yeah, and so here you can see what the media is focusing on in this chart. If you look here, everything's very, very steady. We actually have this really nice straight line of support going right here. And it was on a bit of an uptrend, and it's still up from where it was a few months ago. But the media is focusing on this single point right here, which represents 1 week in the stock market.
Right.
So.
Yeah, I mean, the thing is, too, if all went to hell, it technically should be lower than where it was a couple of weeks ago. Because the situation, you know, if the situation now was worse than a couple of weeks ago, then, I mean, it should have dipped a lot lower. But of course, that's, again, as you rightly said, just 1 week. And if we look here on the this is the daily chart again, that heavy selling volume we're looking at here.
Yeah, so this is something that you actually brought to my attention, which I thought was really interesting when I was looking into all the tensions that are happening right now. So this is the daily chart. We don't usually show daily charts on the show because we don't use them to trade because it is too volatile in a short period of time. But just because it shows off that selling volume a lot right here. So this is the gold standard chart. So we have right here this dip in the market, and then there's this really high volume. If you want to speak a little bit to that and what that can mean for gold.
Yeah, absolutely. So this is fear selling, right? This is when you see that big red volume bar, it means this. First of all, it means the price is down if it's red, and when the volume bar is that high, it means there's a lot of volume. There's a lot of trades. There's a lot of people actually getting out. You know, so I mean. It's really like a panic in the gold market here, which is 1 day really, and this is like actually a very healthy chart. But that's a lot of selling there. Yeah.
But again, that is just in the short term. So this is the chart that we look at. This is the 40-week moving average chart. So we have here, it's still up for the most recent week. We're still riding a high on gold. It's actually had a really strong start to the year. And even back in November and December, we were looking at some really strong movement.
Right, and the thing is too, like gold doesn't really move that much. So for gold to move this much, it's really bullish for it. There's a good amount of volume there. As you can see, the volume stepping up across the bottom of the screen. As you rightly said, Lea, going back to the previous chart, this is what the media is looking at. This is what we're looking at because it's a small
two very different pictures.
Exactly, yeah. They look like almost 2 different charts if you're just looking at those last few bars there.
Yeah, absolutely. So here, just again, the point of all of this is we're showing you that yes, there is this big scary headline that's happening. Yes, it is some uncertainty in the political area, but that doesn't mean that there's going to be an issue in the stock market. This is the SPX and the S&P 500. So we follow this every week, as you know, and you can see that we're still on this really strong uptrend. It's still a really strong chart. There's not even a blip showing for this week on the general market, because this is one sector that is being affected, and it's only one part of one sector that's being affected by the current situation.
Right, and meanwhile, companies and stocks like Tesla are flying through the roof, which is what's propping up the S&P 500. No, I shouldn't say propping up, because that sounds negative and out of the ordinary. The rest of the market is doing fine. The energy sector's had a bit of a wobble. But one thing we spoke about before we came on set here is we were looking at the volume bars at the bottom right of this screen. And as you can see, they're very low, which really means lack of trading in general, right? So usually a stock or the stock market, you can look at it the same way, will go down either by heavy selling or a lack of buying. So there's obviously been a lack of buying, but there's also been a lack of selling, because the S&P 500 has held its high ground. So there are people in the market over this, and again, it's the holiday period, the post-Christmas period. Really, nobody wants to trade stocks between Christmas, New Year, and the week after. So there's buying, even if it's low volume. There's buying because it's propping the S&P 500 up.
Yeah, absolutely. So just when we look at the big picture, there are still places to invest. Everything still looks good. We're still in a bull market. So where should you be investing right now? So we have a couple of charts for you. I went to the energy sector just again to prove that all of this fear mongering that's happening isn't affecting the entire energy sector, let alone the entire market.
Right.
So the first one that we have is BAM. It's Brookfield Asset Management, Inc., which is an alternative asset management company that focuses on real estate for renewable power and the infrastructure and private equity for those renewable energy resources. So this is a really strong chart.
I mean, this is going to be baked into that XLE, that energy ETF as well. So, I mean, as much as that looked a little wobbly, this is sort of the counterweight to the oil stocks, right?
Absolutely.
So renewable energy does well when your sort of traditional energy like oil isn't doing so well. So for people to say energy is bad right now, look at the chart. This is a very strong chart here. So this is a great pick here because you found as you said, the energy sector is what's wrong in the S&P 500, with the traditional oil stocks are what's wrong in the energy sector. So this is a great precise pick.
Yeah, exactly. So wherever you see that there's trouble, try to think of the opposite of that or the balancing factor for that. That's what we've done here. So this is a really, really strong option. The chart's really, really healthy. We love just that straight diagonal upward motion.
Yeah, absolutely. And you've got another one here for us.
Yes. So this one is EVA, and it's Enviva. It's the world's largest producer of industrial wood pellets, which is a renewable and sustainable energy source used to generate electricity and heat. I think they're based out of Canada. But they have several different factories all over the States. And so again, this is a really strong chart. I really like the stepping motion that I've been seeing here as it follows its way up, and it's holding strong. It's just a really, really great chart. And this is a fairly new idea of using these wood pellets. So I didn't read a ton about it, but it's a newer energy alternative. And so they're doing really well for a newer.
I mean, it seems they've got their business in order here. I mean, with the way the chart looks. So another great pick here, and again, another alternative energy source, as opposed to oil. So it's funny, the media can make you think that the world is burning, this oil is burning, what's going on, but I mean, if you look at, if you zoom in a little bit and look at stocks like this,
absolutely.
I mean, you really see, and you look at the S&P 500 even, which isn't even zooming in, you'll see that we're good, Everything seems healthy.
And the thing with that is, again, this is just one sector, and even if this were to turn into a bigger issue and we were to see some volatility in the stock market as a whole because of it, there's still going to be strong stocks like this, and we're going to be there to find them for you. So
and I will say, volatility in the stock market really provides buying opportunity. So there's nothing too wrong with it. So if you hear about all this chaos, as sad as it is, but as an investor, as an unemotional investor, look for buying opportunities, and as we've given you two here, these are two great picks. So make sure you're watching out for that. And Lea, I appreciate you bringing this to my attention. We'll talk to you next time.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.